What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. It's been a few weeks since I posted one of these. Unfortunately, was dealing with some nasty bronchitis, but I'm back posting again and excited to do a SPY review today. I haven't been trading SPY as much lately. I've been focusing more on earnings-related setups and tickers. But with CPI today, I felt like it'd be a great idea to be watching SPY and take some trades on it. And I want to focus today on the importance of watching the related leveraged ETFs. If you're a SPY or QQQ or other major index trader, a lot of times big money makes their bets via different leveraged ETFs and not always directly with SPY. They're not always buying shares of SPY or options on SPY. Sometimes they're just going and buying the cheaper alternative in the leveraged ETFs. And a great example of that today and how you can use that to your advantage. Okay, so I have pulled up here UPRO. This is one of the leveraged S&P 500 ETFs, SPY ETFs. And yesterday, at close, we had the largest single dark pool order in the history of this ETF of UPRO here at 65.91. Now, how do I know it's the largest ever? I use a site called Volume Leaders, okay? That will tell you very important things, because with these dark pools, it's great to know that they come in and how big they are. For instance, here on TradyTix, you can see this order from yesterday, 131 million. Just look around it. Every order is 1 or 2 million. This is 100. It's 100 times bigger than the average order, okay? So even if I didn't know this was the biggest order ever for this ETF, I would know, damn, that is large, and I need to mark it down and pay attention to it. With Volume Leaders, you can actually know how historically big it is, when the last time, if it wasn't the biggest ever, maybe it's the 10th biggest ever, and it's the biggest in 2 years or something. It'll tell you that. So it's a handy site, okay? So I marked this down on UPRO. It's that closing price of yesterday. So basically that also tells me when I'm looking at SPY, and I mark the closing price every day on SPY anyway. That's what this light purple line is. But it tells me I need to pay extra special attention to this level tomorrow, as in today, okay? So what do we start seeing here in pre-market? We get the CPI print. The CPI print comes in actually kind of hot, a little bit hot. Normally you would think, okay, that's going to cause some selling. And it did for a little bit. It wicked down, but then eventually and pretty quickly it popped right back up. And I thought that was a little strange. All right. I would have expected a little bit more of a sell. It did drift back down, but now I'm starting to think, okay, this could be buys here. The thing with these big dark pools, we don't know if they're buys or sells, right? And you go back to the daily, we know that it happened at close on this day. I could see it either way. I could see people taking some profit, taking risk off before CPI. I could see it being a dip buy. We rejected the top of this top trend line, came back, buyer stepped in, held that 9 EMA again. We bounced off of it just a few days ago. It could be a dip buy. It could simply be a bet on CPI. Either way, we don't know, but we got to try to figure it out when we get more information. Okay, so we started getting more information. CPI came in hot, but price went up anyway. Okay, so maybe these are buys and they're protecting this now. Then off the open, first 15-minute candle sets our opening range. We come down, wick below, and shoot straight up. All right, at this point, you see that and you say to yourself, there got to be buys, right? And you could have got it, aggressive and took calls right on this first test after we saw what happened in pre-market with a hot print that should normally initiate some selling. They couldn't sell it. All right, it was bought right back up in pre-market, all the way up to 515, faded back into the open, flushed down again, wicked below, bought right back up. All right, but I would understand maybe not wanting to take that aggressive of a stab on CPI day, right? So let's go down to the lower time frame and talk about maybe plan B here, if you couldn't get in there. Now, another thing, you're looking at these smaller time frames. You don't want to buy on the touch maybe, but you want to just wait a little longer. Look what they give you. Wick down below, close up, big wick on volume, right? On a volume pop from that sell. So sellers running out of steam here a little bit, flushing it, but the volume's getting really low, and then buyers step in on volume. That could be your entry, all right? If you miss that, plan B, okay? We have our opening range set. This is what I call the front run and fail. This is a strategy I use on inside days. Actually, it's called the fail and front run. Sorry, I got those backwards. When a stock is in a range you can trust, an inside day range or an opening range, and it has to make a move all the way from one side of the range to the other, there's a really good chance that when it first initially tests that range, it's not going to break out of it, okay? And sometimes you see more of a pullback. But SPY was pretty strong today after this bounce of that huge order from UPRO, okay? Bulls had their orders set, and they bought it up, and they ripped it, okay? So we see here that this stick, the one that pretty much gets us all the way to the other side of the range, lots of volume. That's your first hint that, yeah, okay, this move can have legs, but I don't want to just buy right away at opening range high because we came pretty far. We might need some time to consolidate and chop a little bit and trade sideways. So what I look for here is a test and fail of opening range high, then I try to get in. And at this point, I'm using EMAs, and the more aggressive you want to be, the lower time frame you use. So 5's kind of your average. I started watching on the 3, and what I did was when it failed here and started consolidating right into this 9 and we got closer to it, this is where I grabbed, okay? Look at that really low volume inside 3-minute candle. That's perfect. All right. And what gave me extra confidence to grab here, right before we got true confirmation of an opening range breakout, our old friend market net flow, guys. All right. If you're not familiar with this tool, I have a video on it. Check it out. Right around the time of that big candle that we talked about, this big stick on volume, market net flow was starting to put in this divergence, bullish divergence. Calls were going straight up and puts were going straight down, okay? And we had time frame continuity and convergence and everything. It was shaping up, and look, it just kept going and going. And we went up all day, right? For the most part. That's what you want to see. And that's the power of this tool. When all these things are in alignment, the divergences, the TFC and everything like that, more often than not, you're going to be safe following that flow. You got to just get a nice entry on your, with your technical analysis. And what we used here was the opening range breakout, but the fail in front run. It fails the break, and then I front run the next test of it a little bit. Because what happens when things are really strong sometimes and you got a bunch of flow and everything like that, is if you wait for the traditional confirmation, which normally what I would do is I'd want to see a 10-minute candle close, all right? That's where it closed, right here. Now, later we got, and we'll talk about that, a really nice retest of it, but it required a ton of patience. And today, I didn't have that much patience seeing how the flow was. And, having missed this entry down here, which I should have got. So I wanted to get in and take advantage of the momentum, and I was able to do that, and the calls went almost 200%, so it worked out. But let's say that, you didn't even know that strategy, right? You don't know about the fail in front run, and you missed all these other entries, and SPY's up here, and you're like, man, I blew it. I missed the whole move, right? Well, not yet, because we still haven't retested the opening range breakout, and we still have fibs. So what do we get later in the day? The flow kind of starts to tire out a little bit. I mean, obviously, calls are way above puts all day, but that doesn't matter that much. Remember, if you haven't seen my market net flow video, it's all about the momentum of the flow and the divergences, right? This is a bullish divergence. But down here, see how puts start coming up? You know, think of it like a stock. You could draw like an uptrend line right here, right? There's actually some bearish momentum, bearish divergence here. Calls are going down, okay? And so we start to pull back. But what do we do when we get pullbacks like this on strong trend days? We look for our fibs and our golden zones, and especially if there's any confluence. So where do we have confluence today? Opening range high, right at the start of the golden zone, and it had never been retested ever since this pop here. And really, it's also an FVG, right? That's where your FVG fills. So we fill that, and we hold the opening range and the 50, and then boom, big stick, and just melts up. Seeing those Vanna and Charm flows, the last day of the window of strength was today, the expiration tomorrow. Even more confidence in, hey, if we do start to melt back, there's a really good chance they're going to buy it back up. We just got to try to nail where are they going to do it. You know, we never know for sure, but we look for places of confluence. You have 3 reasons to get in this trade. Start of the golden zone, opening range high, first retest, FVG fill. All right, all bullish. And you know, then you add in those Vanna Charm flows. If you know anything about that, if you don't, I have a video on that. But you follow, Jam Croissant, and he always retweets that picture of the big lady bouncing into the pool on the floaty, and it pushes her right back up out of the water. That's what this is. All right. And we saw it today. We've seen it a lot in these melt ups, in these windows of strength. And today was the last day. That's when it's strongest, tomorrow of expiration. But this is what how I traded SPY today. And hopefully there's some tips in here to help you guys in the future. If you see similar things, in the description, I'll make a list of all the kind of popular leveraged ETFs for SPY, Qs, IWM, stuff like that. So you can keep an eye on those for dark pools and big block trades and things like that to help you find these levels that you can trust. All right. If you have any questions about anything in the video, just leave a comment or find me on Twitter and I'll help you out.